Hey YouTube, this is Zach with Achilles Financial. Today, with all of the incredible earnings that we've seen this week, I want to talk about an opportunity to look at some of these companies that had very strong earnings, but potentially they didn't perform very well in the post-earnings play or run, and how you can potentially benefit from this utilizing a options leap contract. So LEAP is essentially a long-term equity anticipation security. The LEAP contract. This is essentially an options contract for greater than a single year. Today I want to talk about AMD because AMD just had a monster earnings this past week. And what they essentially did is they continue to reiterate that they are going to continue growing not only profitably, but at a 50% growth rate over the course of the next 12 months. So that being said, you may look at the share price, which again, they finished down today, and we may look at this and say, this may be an opportunity to bet long-term on AMD. And leaps can be attractive because they give you a lot of time, so you have the potential to get in and get out should something go a direction that you don't necessarily want it to. So I'm going to be looking at AMD. I'm going to utilize the options trading functionality in Thinkorswim web, which you can see in the top left-hand corner of my screen. This is utilizing TD Ameritrade. And you see our typical options contracts and strike price. What we're going to look at for this exercise is we actually have to go much further down because a LEAPS contract is technically greater than 1 year. So we've got this June 17, 2020 options contract, or we could go all the way out to the 2023. I'm going to utilize the June 17th for demonstrative purposes. What this is essentially doing with an options contract is I have the opportunity to buy 100 shares of AMD stock at $100 per share if the price is over $100 a share. However, under the current scenario here, that is going to cost me $9.60 per share, or $960 for this contract. You can see right here for this example, we're buying 10 contracts, which means that this total price would be $9,600 for this options contract. So why would I do this? The key advantage here with this much time is AMD may have the potential to go up in value quite a bit. You can see the price in the bottom of your screen at $90 a share. This same contract would be representative under current scenario of $3,000 profit as of today. However, this is a pretty wide range. The key item here though is this does give you the capability to have some leeway should the stock go down or should the stock go up exponentially. It gives you plenty of decision-making power. What I'm looking at here is some of this upside because I think that AMD by this time next year, if they continue to execute as well as they have, they could continue to grow. At $120 a share, this stock does return under current conditions about $20,000 total profit, or at expiration about $11,000 of total profit, which would either be A, right at 100% return on investment, or B, I could exercise those contracts and I could purchase my shares of AMD for $100 per share. So what this is essentially doing is it gives you the capability to take some speculative bets on stocks that you would like long term, but maybe potentially don't want to go out and buy 100 shares of right now. So AMD is a stock where right now 100 shares is going to cost you $8,300. However, I could buy one of these contracts for $960 and speculate that the stock is going to go up, and I'm giving myself 414 days to be able to do so. If the stock does go up, then it gives me the capability to profit on it, but also I may have $10,000 that I'm willing to invest at this time next year. And if the stock is $120 a share, I may opt to buy the shares at that point in time and take that profit. Or I could always sell at that point in time and I no longer have to really be worried about it because now I've just made a profit on the options contract. On the inverse side of this, instead of investing $8,300 today because maybe I think that the stock is going to go down, but I want some of the upside exposure, if the stock were to go down to say $73 a share, my max risk is only what I enter the contract at of $9,600 or $960 in this scenario, and I'd only be down about halfway if it went to that price today. So there's a lot of opportunity here, and there's a lot of stocks where I think this potential could be in play, including AMD, Ford, some of the banking stocks, and STEM Inc. So there's a lot of opportunity for LEAPS contracts, and I just wanted to highlight how this can be a successful approach to options trading because it gives you some of that potential upside or potential downside on highly speculative stocks that still have a ways to go. So if you find this content helpful, please leave a like and subscribe, and we will continue covering these type of stocks. And if you want to talk to us more, feel free to join the Discord in the link down below. Thanks. Talk to you later.